Hi, welcome to Pauline Young's channel. Property sector was one of the worst hit sector during the pandemic year 2020. They may be down during the recession, but when the economy picks up, their earnings potential will be high again. In this video, we shall look at the property sector and to rank them according to their market capitalization. Before we continue, don't forget to subscribe to our channel and to click the like and the bell buttons so you will immediately get notified when a new video comes out. Rank number 1 is IOI Properties Group Berhad with a market capitalization of 7.65 billion ringgit. According to IOI Properties 2020 annual reports, the group has an outstanding GDV of 90.5 billion ringgit. GDV stands for Gross Development Value. This is the projected value of a property's development once it is completed. The GDV is an important valuation metric used by investors and properties developers. The second quarter financial year 2021 core net profit decreased 15% quarter-on-quarter to 147 million ringgit owing to weaker contributions from all segments due to the pandemic. Despite being hit by the pandemic, first half of 2021 earnings before interest and taxes actually improved 3% year-on-year due to strong contributions from the China. Property sales from its two townships in China, IOI Palm City and IOI Palm International Park House, which have remaining GDV of approximately 3 billion ringgit, will likely remain encouraging and underpin the group's earnings in the subsequent quarters. While its Malaysian operation may not be as great, it will remain satisfactory. Unbilled sales stood at 477 million ringgit, while unsold properties were at 2.12 billion ringgit as of second quarter of financial year 2021. As at March 21, the company was trading at 1 ringgit and 39 cents, PE ratio 15.87, ROE 2.5%, profit margin 21.3%, dividend yield of 1.08%, debt to equity of 0.6 and a healthy cash reserves of 665 million ringgit. Rank number 2 is Sime Darby Property Berhad with a market capitalization of 4.45 billion ringgit. According to 2020 annual reports, Sime Darby Property has an outstanding GDV of 90.4 billion ringgit. SIMEPROP chalked up new sales of 1.98 billion ringgit in financial year 2020, whereby 54% are derived from the newly launched landed residential projects. The company's immediate priorities for financial year 2021 will be the diversification of income streams such as the industrial and logistic development. Key launches in 2021 under the industrial and logistics segment include the Stage 1 of Elmina Business Park, comprising of 303 industrial units and 78 commercial units with a GDV of 1.26 billion ringgit in the second half of financial year 2021. SIMEPROP will also expand its product offering to include its first multi-tenant ready-built warehouse with a GDV of 530 million ringgit in Bandar Bukit Raja Industrial Gateway, Klang, Selangor. As at March 2021, SIMEPROP was trading at 66 cents, PE, ROE and profit margin were all negative, dividend yield 1.5%, debt to equity of 0.37 and the cash reserves was healthy at 456 million ringgit. Rank number 3 is SPSETIA Berhad with a market capitalization of 4.42 billion ringgit. SPSETIA has a potential GDV of 138 billion ringgit. According to the CGS CIMB research, SPSETIA plans to launch projects worth up to 3.7 billion ringgit in gross development value GDV in financial year 2021, with about 94% development in Malaysia. SPSETIA fourth quarter financial year 2020 net profit came in at 55.5 million ringgit, which is equivalent to negative 24% year-on-year and negative 121.1% quarter-on-quarter, excluding the impairments of the completed inventories and work-in-progress development in the Battersea Power Station, which is a 40% owned joint venture. The estimated year-to-date net loss is at 221.9 million ringgit. Financial year 2020 net profit was largely dragged by provisions for the impairment of the work in progress and inventories under construction of 62.4 million pounds. As at March 21, SPSETIA was trading at 1 ringgit and 9 cents. PE, ROE and profit margin were negative due to negative earnings in the rolling 4 quarters. Debt to equity 0.86 and a huge cash reserve stood at 1.2 billion ringgit. Rank number 4 is UOA Development Berhad with a market capitalization of 3.7 billion ringgit. As of December 2020, UOA Group has a GDV of 2.9 billion ringgit. Fourth quarter 2020 core net profit was down by 16% with lower operating costs resulting in slightly better core net profit margin of 44%, which is the highest among the top 10 property stocks in Bursa Malaysia. The group maintains a strong net cash position of 83 cents per share. In addition, the group has 2.9 billion ringgit worth of projects currently under development and had launched Goodwood Residence at Bangsar South with a GDV of 600 million ringgit in September 2019, which is ending in third quarter of 2019, and Astor Green Residence at Sri Petaling, GDV of 250 million ringgit in November 2019, which are expected to contribute positively to 21 financial year sales. Upcoming future launches with GDV of 440 million ringgit are from Bandar Tun Razak Development and UOA Business Park Phase 2. As at March 21st, UOA was trading at 1 ringgit and 75 cents. Its fundamental was solid at PE ratio 9.5, ROE 7.2%, profit margin of 46%, dividend yield 8%. It has zero debt to equity ratio and it is sitting on a huge cash reserve of 720 million ringgit. Rank number 5 is UEM Sunrise Berhad with a market capitalization of 2.3 billion ringgit. UEM Sunrise Berhad has an estimated gross domestic value or GDV for the 12,300 acres is close to 107 billion ringgit with a GDV of pipeline projects worth 66 billion ringgit. Ongoing projects that have yet to be launched have an estimated GDV of 40.4 billion ringgit. UEMS, via its subsidiary UEM Land Berhad, has entered into a conditional sale and purchase agreement to buy a 9.93-acre leasehold piece of factory land and the building thereon from Dutch Lady Milk Industries Berhad at Section 13, Petaling Jaya for 200 million ringgit. The land cost appears to be fair at about 15% of projected 1.3 billion ringgit GDV. They plan to build a mixed-use development there in the next 2 to 3 years, with the deal expected to be completed by the end of this year. This will be the group's addition to its land bank in the central region after the acquisition of an 11.45-acre plot in Taman Pertama last year. As at March 21st, the company was trading at 45 cents with negative PE, ROE and profit margin due to negative earnings, debt to equity ratio 0.64 and a huge cash reserve of 1.04 billion ringgit. Rank number 6 is IGB Berhad with a market capitalization of 2.3 billion ringgit. IGB Berhad, through its wholly owned subsidiary Tan and Tan Developments Berhad, plans to launch a project at its Kundang Township in Gombak and also another one in South Point Development in Mid-Valley City in the second quarter of 2021 and the third quarter of 2021 respectively. The Kundang project is worth 80 million GDV while the Mid-Valley City project is worth 400 million GDV. In addition, key catalyst near term is a proposal listing of its commercial assets and also potential sale of non-core assets. Despite the weak earnings caused by the pandemic recession, the group was able to maintain a positive earnings for the rolling 4 quarters earnings per share. As at March 21st, the group was trading at 2.63 ringgit, PE ratio 252, ROE 0.26%, profit margin 0.9%, debt to equity 1.12, and the cash reserve stood at 793 million ringgit. Rank number 7 is Malaysian Resources Corporation Berhad MRCB with a market capitalization of 2.1 billion ringgit. MRCB has an outstanding GDV of 50.4 billion ringgit in 2020. It is also set to make its mark in New Zealand via a partnership with Panuka Development Auckland to develop the AOT Central Overstation development with a gross development value of 1.3 billion ringgit in Auckland City Centre. In Malaysia, it has set a sales target of 600 million ringgit for 2021 with new launches in KL Central, PJ Central and Kwasa Central. MRCB has also submitted tenders worth 2.7 billion ringgit as at end of 2020 for new construction contracts with a high remaining order book of 20.5 billion ringgit, comprising mainly long-term projects. As at March 21st, MRCB was trading at 48 cents and a negative PE, ROE and a profit margin. Debt to equity was 0.29 and the cash reserve was at 540 million ringgit. Rank number 8 is MAHSING Group Berhad with a market capitalization of 2 billion ringgit. As of June 30th, 2020, the group has a remaining GDV of about 23 billion ringgit and an unbilled sales of 1.64 billion ringgit. The management introduced financial year 2020 sales target of 1.6 billion ringgit on the back of launch target of 2.4 billion ringgit. Focus is still largely in the Klang Valley, with the remainder from the Johor and Penang. Glove operations on track to begin in April 2021. For orders from April to June, MAHSING has locked in sales price of $100 to $110 per 1,000 pieces. As at March 2021, MAHSING was trading at 83 cents, PE ratio 20, ROE 2.4%, profit margin 6.6%. It has a low debt equity ratio of 0.12 and a healthy cash reserves of 1.1 billion ringgit. Rank number 9 is OSK Holdings Berhad with a market capitalization of 1.99 billion ringgit. OSK has a land bank totals 566.15 hectares with an estimated gross development value of 13.41 billion ringgit. The land bank is located in Klang Valley, Sungai Petani Kedah, Butterworth Penang, Kuantan Pahang, Seremban Negeri Sembilan, and Melbourne, Australia. OSK Holdings' other business segments are construction, industries, hospitality, and financial services. Despite operating in a recession environment, OSK was able to maintain positive earnings. As at March 21st, it was trading at 95 cents, PE ratio 5.8, ROE 6.4%, profit margin of 31%, dividend yield of 1.05%, debt to equity of 0.45, and the cash reserve stood at 662 million ringgit. Rank number 10 is ECOWLD Development Group with a market capitalization of 1.7 billion ringgit. ECOWLD Malaysia is a big player in the industrial space with approximately 1,760 acres under development. This represents a gross development value or GDV of 9.5 billion ringgit. Their financial year 2020 core net income of 239.8 million ringgit came in above expectations due to stronger than expected property sales in the fourth quarter financial year 2020. ECOWLD declared a maiden dividend of 2 cents per share, which translates into dividend yield of 3.4%. As at March 21st, the group was trading at 59 cents, PE ratio 12.8, ROE 2.9%, profit margin 6.7%, debt to equity 0.7, and the cash reserve stood at 254 million ringgit. The above analysis is for information purpose and we do not initiate a buy call or a sell call. At the point of recording, we do not hold any of the stocks mentioned in this video. Thank you.